Hello, good afternoon. I'm so sorry for a few minutes delay. I had some technical issues, unfortunately, with Zoom. It's quite a new tool for us, so we are all a little bit like learning, but thank you so much for joining and for waiting. I start this meeting straight ahead. I'm going to share some presentation on scenario modeling today. My name is Małgorzata Jargan. I work for DataPartner, and thank you so much for joining and for so great attendance. So I'm going to also to share the screen right now so that you see the presentation and then the software. And yes, let me now manage this. And PowerPoint, that's how I'm going to start. Before I start, I would like to share some few words about DataPartner. We are a software company. We have developed a software for investment appraisals, cash flow modeling, valuations, and enabling quick appraisals and profitability analysis of any ideas you may have. We have right now over 1,750 customers in 55 countries. And what's beautiful about the software and the expertise which is included there is that there are really companies and customers representing all, really all industries, like automotive, like Daimler, oil and gas, like energy companies, mining companies, consulting companies. So one software for all case studies you can imagine. And the wonderful thing is that once you check the investment profitability over there, you can really compare it side by side, like investments, like apples to apples, and keep the consistency in developing the model throughout the corporation, throughout your company over the time across business units. So this tool I'm going to use today for showing how easy it is to model the scenario of a retail case. Let's have a look at the details. So I'm going to show today a case of a retail store, Molly's grocery store. When Molly started her project, she didn't even know that the virus existed. So of course, she drafted a plan, but March this year has put a dramatic change to her operations. She got a pandemic hit for her turnover. Right now, it's only 60% of the planned turnover, and she was, of course, trying to draft a plan for survival and the remedy plan. So let's have a look how her ideas are successful. Here are just several inputs for this case study. Investments for 100,000 euros, planned annual turnover 1.5 million, costs of goods sold 1 million, and also some fixed costs like staff, rents, other fixed costs. 170,000, 60,000, and 70,000. The term of this model is 5 years. However, later on we can also extend it to more years or create even the model in the perpetuity. The discount rate is 8%, and we assume that all of the numbers for operating the business grow 3% each, both on income and on cost side. And inventory turnover is just 14 days. That's basically our assumptions. So I'm going to build first the model for the first scenario. That's how it is. I'm going to open the software Invest for Excel. This is how it looks like, the front, the starting page. When I want to create a new file, I just press the button here and it offers me several options. For our investment, I would choose the first one, asset investment, project, or business planning. So this is what I would do, but for our meeting, I have already prepared some template. It took me literally 1 minute, but I have entered financing there so that we do not lose much more time for modeling. So this is what's ready. I will go to my ready template. It's here. And you can see that I have planned 5 years for operations for Molly's grocery store. We can change it later. This is 8% of discount rate. Income tax, it's omitted for this case study, but of course we can also model it quite flexibly. And let's go to investments. Molly has just opened her store in January, so well, I will put the investment entry here, 400,000. This is how she has just completed it at the beginning of January and opened her store. And that was our only investment. Grocery sales plan, it was 1.5 million with 3% increase. I can choose such value here, 2% or 3%, or with minus with decrease. So this is where you model the increase of the parameters. And on the cost sides, this is, she achieved quite high margin. Sorry. This was only 1 million of the goods sold. For this plant sales, 1.5 million. So this is the basic plan. Let's have a look at the income statement. What do we have here? Well, this is what I have prepared in advance. So for financing of this project, I also entered the loan which Molly took from the bank, 240,000. The interest is 4%. The interest expenses are modeled here. So she plans to repay it in 5 years. Basically, our income statement is almost completed. We still have to model the fixed costs. So now the staff costs, please notice that it's about 12% of the plant sales for the store. Rents minus 60, and other fixed costs minus 70. That's it. Our income statement, the inputs are for the income statements are ready. Now let's go to the working capital. We need to think, it's a store, so some inventories are must to have. For Molly case, it's 14 days and it's based on raw materials and consumables, so basically on our costs of goods sold. But in the software, I can also choose freely, define many turnover periods for various items and just choose it from the list. So it's very convenient. Working capital ready. Let's have a look at the cash flow statement. It looks wonderful. Please have a look. Here, the free cash flow for the project, already in the first year, very positive number, 161 million. In the next years, it only grows. There is also some residual value related to working capital repayment. So it all looks great. We can also see that we generate enough business results, very good business results that can allow us to cover the liabilities. So here is the financial income and expenses for the loan, and also the loan repayment, and the total cash flow, and even what's more important, cumulative total cash flow is all the time positive. So it's a very, very good project. Let's have a look also at the result for NPV, much bigger than zero, 434 million, internal rate of return 40%. Payback time, let's have a look, 2.4 years. So it's a good project. Let's put it to the comparison table. I can also check this project against the sensitivity analysis. For example, here it's automatically updating all of the charts. I can also turn this option on or off. But let's have a look at the first chart. It's for discount rate. This is the discount factor. We can see even that with the higher discount rate, it's also profitable project. And also when we go to the when we go to the income, first we have investment, but then we have the income. This is the sensitivity for the project. So we assume that actually income is reduced by -10% or by -20% or plus, and all other parameters are without change. So more or less in this scenario, in this sensitivity analysis, we can assume that this income's sensitivity is like for the price. Rather than for the volume of sales, because volume of sales is also related to the cost of goods sold. So it's better than to use some other parameter sensitivity analysis for that. So this is more related to the price. But we can see that basically already with the -10% of the income, we hit the negative net present value. So the project is, even though it looks very good, it is a little bit sensitive. And still I can make quickly the cash flow analysis chart for the first scenario. Cash flow, okay. It's here. So we see that free cash flow all the time positive here, and the cumulative discounted free cash flow is at the end positive. So it also shows that that it is a profitable project. So let's go back to our model and let's have a look, how does this scenario look like when the coronavirus hit Molly's turnover and how it affected her business. So right now we have just not 100% of sales, but we have just 60% of sales. And we have also 60% of goods sold. Let's have a look straight to the cash flow statement. We see that from day one, this business is not profitable. It generates negative cash flow. So having such negative business results, it shows that even if the bank is perhaps willing to rearrange our repayments or prolong the repayment period, it might not be really convincing for the bank, because you can see that it's negative. So this is not a good plan. Molly needs to think about other solution for the pandemic. She needs to perhaps find an online channel. But before we start modeling online channel as a solution, I will just put this scenario as the second scenario to our comparison table, so that we can also compare these scenarios side by side. Just a moment, it's here. So this is our scenario number 2. You can see that, well, our plan was 434 NPV on plus. Now with the pandemic hit, 60% of turnover and all costs stay untouched. It is very, very negative. So how to reinvent the business? Let's go back and let's fund the online channel. Molly builds a platform for online sales. She photographs her items, salad, vegetables, meats, tobacco perhaps, and then she tries to recover her her sales via the online channel. And her plan is to recover 20% via that channel of the original plan. For sure, some costs will increase because the online channel is more laborious, but let's say that some staff could be requested to perform some online sales activities, and also there might be perhaps some more employment to handle this online channel. We should also assume that maybe there is some commission paid to the online platforms that facilitate Molly's sales, whatever. So I'm going to increase the fixed cost to 80%, to 80,000, from 70 to 80,000, and assume the increase of 3% annually. Let's have a look at the cash flow first of all, and then at the result. All right, there are good news. The online shop is bringing additional turnover. Molly's business is generating positive results. We can also see that Molly is able to also pay her interest on the loan and repay her debt, and still cumulative total cash flow is positive, so she is not losing on her liquidity. However, she is on the verge of liquidity. As you see, it's slightly positive. So perhaps if I were Molly, I would for sure request the bank for rearranging, for prolonging the debt repayment. And this plan looks much better because her business is generating positive results. So now the bank can be actually maybe considering Molly's request. Let's have a look, however, at the result. You can see that net present value of the project is negative. Why is it negative? Because Molly's assumption was to generate 8% internal rate of return. This was her weighted average cost of capital for that project. But right now, we find out that Molly can be happy just with the 5.5%. Let's have a look also at the cash flow for this project. Okay, we see that cumulative total cash flow is all the time positive. This is very important. She doesn't miss any financing. However, we see that cumulative discounted free cash flow with the discount rate of 8% is of course negative. Its NPV is negative. So this is the new normal for Molly. Unfortunately, her business is not as profitable. It's only 5.57%. Let's put it to the comparison table. This is the scenario. This is just a case study and just an example. So let's think also about a little bit like a business model for the store. I assumed here just 5 years of operations, and the residual value is zero. It's only related to working capital. But what if we imagine that perhaps Molly could operate with the online channel like 1 year more, or 2 years more, or 5 years more, or until eternity, like as a perpetuity model? So we can also check it very quickly in the software. What would be the outcome for her business? Because 5 years, it's still a very short period for a big investment into the store. So let's have a look. I'm going to change my calculation for perpetuity. And let's have a look for this perpetuity model. Now my extrapolation period is 5 years, but I can also see how is it if Molly runs the store 1 year more and her net cash flow for a year is just 100. We can see that already 1 year is helping Molly and the net present value is positive. So actually, even this 5 years limitation for the calculation is just the beginning of our assumptions on the business model, and building more scenarios and trying to figure out what can be the profitability of the business. What happens if it's just 5 years? Then of course it's then very high. What if it's perpetual model? Well, then it's super high. Perhaps this cash flow is a little bit too high. Maybe we can also have some realistic assumptions for the maintenance of the store and for actually increased costs for keeping online channel. Let's see what if it is 70 only. Then it's still, of course, very good business model. So this was just the example that we can start building the scenario just for the first 5 years and then extend it to more years, to perpetual model, and see what is the impact on the profitability, on the long-term profitability. So this is of course like maybe too idealistic model. Maybe if I were Molly, maybe I could consider, if it's a store, maybe 5 years more, and then had a more realistic model for 10 years of operations. So this is basically how you can build very quickly several scenarios. In the software, you can also have a very detailed periodization. This is the same case, but in another file, I made it really with monthly view. So you can see that in the beginning, it's the investment, 400,000. And then in January, February, well, we can see already that in January, our working capital needs are much higher than the financing what we had. So already monthly view shows the more realistic need for the capital to fund the project. So that's why it's also worth to model the cases not only with annual view but also with the more detailed view. In January, it's still according to the plan, turnover as planned, and in March and April, it's a pandemic hit, 60% of turnover. And starting from May, we have the remedy with the online shop. So this is how I modeled it. And again, monthly view of the software goes into the annual view. So this is like another way of modeling this scenario. Okay, I can even just the result is very similar. This is this scenario just for 5 years. I can also add it to the comparison table. And finally, I also wanted to show you one more way for building a quick scenario calculator. This is my spreadsheet. I have just created this several scenarios, like now 1, 2, 3, what we have just discussed. But if you want to add some more, you can just add another scenario for online channel, maybe with more exact costs, and then simply how to build it. I just quickly put my assumptions to the column for inputs. I use software as the engine, and I pull the results from the calculations from the cash flow statement here, and I immediately see how does my cash flow look like if I have good liquidity or not, how long is my runway, and what is also NPV and key other profitability indicators according to the discounted free cash flow methodology. So this is another way for building it. And so whenever you have any idea for your business, whether you need to rethink the business idea for your company or for your activities, or you see this present situation really as the opportunity to build something new on that, I strongly recommend make a plan, include several years, think exactly about your cost of capital, about the risk, make it more detailed also with the monthly view. Then you really have more exact values for the actual needed capital related to working capital. Think about the residual value. Is it just the terminal value, or can you prolong the business for several years, extrapolate it, or can you use the perpetuity? All of this should be included in the analysis. And of course, very much the sensitivity analysis is also helping in seeing straight away whether your project is a very risky one or not so risky. So let's hope that, well, for Molly, the new normal is becoming a good business idea still. And I also wish you all the best and hope that with your business ideas are also profitable. And if you have any questions, just please tell me now. You can ask them in the chat, or also I warmly invite you to contact me, and I will be very happy to have the individual discussion about your cases. Or if you just have any questions, you would like to know how to model your cases more, then please, warm welcome. So this was just a quick introduction to scenario modeling. I hope you enjoyed it. I see no questions. So half an hour gone. Thank you very much. If you like, I can send you the presentation, I can send you the files, and please also feel free to rewatch this recording. I will send you the links. And yes, have a great afternoon. Thank you very much.